Welcome to TradeTheMBI.com. This is John's report is for the 5th of October. Well, there it is. Quantitative easing has begun, and the market is back to where it was because the Fed has cut rate. Well, wait a minute. The Fed didn't do anything and hasn't said it would, but everyone believes that the Fed is going to do that. And as I've always said, perception is often worth far more than the reality because in this particular case, people are trading the rumor, and of course, you'll sell the news when they reiterate that potentially they are not. Now, if they do change course, there's a pretty strong bets that they're going to here. Um, then everything goes back to the way it was, and we shoot back up to near 5,000. That we're even this elevation with what we're seeing from the real economy is an interesting uh, juxtaposition, but within any relative decline, we always get these kind of pops going back and forth as there's exuberance, as the possibility that things will improve. But when we look at the readings, we're still seeing strong MBI move up here, as well as that DOC orange dipping all the way below negative 18.9 versus 18.1 for the red. So it's dipped below the red line. And those are all bullish characteristics. And you can see short interest completely falling off. And this is that forced short covering that just propels it. And the problem is that when you run out of shorts, you run out of new buyers unless you have unlimited amounts of money. But we knew new fund money was coming in right about now, so this was perfectly appropriate to have that kind of bounce. And from an NQ, you can also see above that 23% level, and we should get the close here is already taking place. It's post market now, but within the futures range. So all in all, doing exactly what bulls would expect from a short cover rally, and it's pretty intense. Um, it's also carrying over into euro because obviously if the U.S. is cutting rates and uh, going back to quantitative easing, then of course you want euros. Not that anything, well, actually everything has changed in the EU because of that. Even though they won't have gas or anything else, that doesn't really matter. Jump into euros. And the buy signal's there. I mean, there's no question about that. This is one of those what is. You can debate with your friends all you want about all the reasons why it shouldn't. Never been interested too much in that other than for conversation. But the reality is, we trade what we get from a signal standpoint. And even with the red leading and the magenta over, we know that that still has buy potentials within it, especially above the 23%. Below 23%, I'm always hesitant on that one. But once it got over it, um, then it's just a matter of going with it because those can carry through. And you can see it 52. That's pretty extreme. All the other peaks that we've gotten from magenta like that, they can last for a little bit longer. This goes true for the S&P as well, but then they roll over. So reality eventually hits. The interesting thing is you would expect an explosion here also from TLT that rates are going to be going down. And the bond market is not agreeing with that kind of optimism, interestingly enough. And does the bond market get it wrong very often? Not really. They were calling for a much more severe decline than we've seen. So in that case, I would say yes, they've gotten it wrong in the short term, but in the long term, they rarely get it wrong. But that is a huge boon for gold because more spending and lower rates shoot gold up. We'll see if that actually takes place, though. It's a whole different world. And then looking over here at oil, as also OPEC has decided that they've got quite a bit of power now, once again, and they're taking advantage of it. So cutting production causes price to rise. So even if there's a reduction in consumption, it's not going to play very well at the pump. And this gets us back close to that 90 threshold. And if they get back above over 90, then you have the same issues that were existing. I mean, there was some exuberance here with the dip below 80, but you move back over 90 again and you've negated all that, even though it lasted for a couple of weeks. Everyone's going to see their pump prices jump back up again. And from Bitcoin standpoint, expected this move sooner is not all that huge given the exuberance that we're seeing from the market, which is interesting. So it's beginning to trade as its own little device. It had a strong MBI white lead here, which has probably muted it significantly, whereas the other markets had really surpassed over that. So it just isn't that big a buying frenzy coming into cryptos, but there has been plenty of support. We see the same thing from Ethereum. It's even weaker from a daily standpoint. So it's an interesting side note from a 50K. You can see the buy setup. That's cyan colored simply because it reflects cyan under red, and that is what? Always buy. You just keep saying that, cyan under red, always buy. And remains true until you get very specific correlation between steel crossing back below and red beginning its fade. So overall, it's a pretty strong suit to sit with, that cyan under red. And from an intraday standpoint, 5K looking here, we saw towards the end of the day there was a bit of a sell-off that didn't take long after the market closed. Aftermarket buyers bought in the European session. Asia began, and it just continued to elevate. When it gets that significant, you can see right here where these are where you begin your little setups with the DOC here, where green dips below cyan, just to the point where you begin to see a fade of red DOC. And in this particular case, didn't last very long. Nonetheless, it was still decent setup. And then the return buy came as pre-market before the regular session opened and just took off from there. That expectation driving it, more short covering, because those margin calls happen on the reverse side as well. And then by the time we got later on, we started getting a few more sell signals and a much weaker shakeout. So you can see how strong that shakeout, well over plus 15. And then here peaking out sub 15 makes a big difference. And that's where we started to catch a little bit more drift to the downside. It wasn't that many, as many points, but nonetheless started to fill back some of these positive extremes that definitely are worth noting because they're going to get continued to be filled. And first sets of them got their early fill, and then we caught the next wave because that seemed like a bargain. So why not take it? And sure enough, brought us all the way back up, and a couple little ABC moves right there. And then we got a little more chaotic as we got towards the end of the day, and bulls just pushed through it and drove it further. So you pretty much eliminated, a lot of the short setups, and that's going to create the next new one potentially at the 38%. But obviously, we will wait to see it from a daily standpoint because you've got to have the readings support it. And at the end of the day, that's what it comes down to. Following exactly what it tells us to do. And we can debate all the policy issues all we want, but again, we're still going to just follow what the readings tell us. So as always, I will continue to post updates, and you can look for me on the Skype chat. Trade well. We'll talk to you later.